Hello, everybody, and welcome to the weekly trade view, hosted, of course, by yours truly, Eliman Dambell. And what we are going to be doing on the weekly trade view each and every single Tuesday, 1 p.m. GMT, is essentially analyzing three of the most traded and popular instruments of that given week. Now, this and every single week, again, Tuesdays, 1 p.m., you will have the opportunity to look at some of our analysis and essentially gain some insight into what is happening in the world of financial markets. Now, when it pertains to these sessions, of course, we aren't here to give you advice as it pertains to which instruments or markets to trade. It will just essentially be an overview to give you information on essentially what is going on. As far as looking and finding some of those respective opportunities, we are going to be doing so on numerous platforms. The main platform we are going to be focusing on, of course, is the MT4 platform. But here at Tradeview, you do have a variety of options in which you can use, whether it is the MT4, whether it is the MT5, C Trader, and a few other areas in which you will have access to. Of course, we are an ECN STP broker and, of course, regulated by SEMA. Now, from your own perspective, what we are going to do now essentially is move on to the platform, the MT4 platform, in which we will be able to look at some of the respective markets in which we believe could potentially be highly traded in the next few days. Now, when it comes to this week, and every week essentially, you do see quite a lot of moves taking place in gold. Before we actually get on to the charts, let's look at the fundamentals for this week. Each and every single week, of course, each and every single one of you could have access to an economic calendar where you will be able to filter and segment some of the highly important pieces of fundamental information to come out on that given day, week, and whatever else. Now, with this week, of course, we are coming from the back of the first week of November, where we had the FOMC, where we had non-farm payrolls and quite a substantial amount of information pouring into the market. This week essentially is no different, but it looks like it is the turn of the UK. Now, this Thursday coming up, of course, we do have Super Thursday in the UK, where we are going to have the Bank of England rate decision expected to remain at 0.75 of a percentage. You do have Carney speaking, and generally when it pertains to the UK and the Bank of England, we know, of course, there is going to be an election in the next few weeks, in the next 5 or 6 weeks. So you are going to see a lot of attention paid to anything economic related and looking at the effects that could potentially have on the pound. So it is going to be an interesting few weeks looking at any UK related and GBP related markets. Now, for the rest of the week, again, of course, we have that Super Thursday, a few speeches there from the UK and whatever else. You do have the sovereign debt by Moody's as well. On Friday, you have the Canadian unemployment numbers. Now, one of the numbers which came out today, which was pretty interesting, was, of course, the services composite. And generally, that is one of the reasons why we see such a huge sell-off taking place in gold. Essentially, what we did see happen is it came in better than expected. Now, coming in better than expected, saying that the services industry in the US is performing better than initially forecasted, meant a lot of dollar related strength. So having that dollar related strength essentially would have correlated to having gold related weakness, which is why you see that huge sell off taking place today in and around the same time where we did see that announcement come in. The question is, what is next? The question is, what is next, or what potentially could be next? Now, we are looking at, of course, a 4-hour time frame. Looking at a 4-hour time frame, what you do see is one of two things. Firstly, you do see, of course, the markets have hit what is or can be perceived to be a floor. And as soon as it has hit the floor, of course, you can see a lot of uncertainty. Some of those sellers who would have, of course, been involved from this position seem like they may now be taking profits. And of course, if they are taking profits, what that could mean is you may see a lot of dojis forming, a lot of uncertainty starting to form, and potentially there could be a reversal. But It is difficult to say because if you are looking at the momentum, at the moment we have the 10-day moving average there in red, you have the 25-day moving average in blue, and of course the 50-day there in olive green. Now, historically, when you do see these downwards crossovers, of course, we see what it means as it pertains to the market's movement and whatever else. And now you can see, yes, there was that initial crossover, 10 against 25 moving average. But could there be potential for more? Could we see the potential for more fallout from this respective chart? If you zoom out, this again, a 4-hour time frame, you can see it's been a very, very long while besides that move there, which some could consider a false breakout, where we did see this current this metal trading bill. So the entirety of essentially the last 3 months, we have seen the markets essentially remain in this range. If you go on to a daily time frame, essentially that is even clearer. Just to zoom in on the current state. Two ways to look at this. A lot of traders may potentially ask themselves the question, could we see what happened the last 3 months essentially repeat itself? Could history repeat itself as it pertains to the last 12 weeks, where each and every single time it hit that area there of 1283, it went back up? Or are we looking at a position in which history is about to change and we are essentially set to see a new direction? Of course, we are seeing record highs taking place each and every single day in the S&P, in the Dow Jones, and whatever else. So you are seeing US-related markets growing and growing and growing, which could mean that investors are looking at potentially taking their money out of safe havens similar to gold, and of course getting back into the equities and stock and indices markets respective. So it's an interesting one. It's an interesting one to look at. So a lot of people may essentially, who are bullish, would be looking at history potentially repeating itself, and that floor holding firm may also, if you're looking at the RSI, you can see the markets are somewhat closer to being oversold than overbought. So you may say, okay, it is relatively weak. Could this be a good and prime opportunity to buy, hoping that the markets essentially rise? And one final indicator some may look to use is the momentum. You can see, yes, there was an upwards crossover of those moving averages. Ironically, which took essentially damn near 6 weeks to take. As you can see, that huge consolidation, even though there was the potential for that upwards crossover there for a while, it just didn't happen until last week's run. Now, even though last week's run has been engulfed with this bearish candlestick, could we see the bulls essentially retreat, but essentially come back in force and bring the price back up? So a lot of questions and a lot of answers in which we hope to potentially find out over the next few days. So however you are trading gold, hopefully that information which we have somewhat broken down can be not a guidance, but essentially give you a better overview from a verbal sense as to what is currently taking place. Now, if we move on to the next, and again, what we did say, we are only going to be looking at free instruments each and every single Tuesday. The free today we are going to be looking at, of course, is gold. We're looking at crude oil, and last but not least, we will be looking at euro dollar. What I am going to try and do each and every single week is try and look at a different trio, of course, just based on where we believe a lot of opportunities may be coming from, just based on the fundamentals and whatever else. Now, crude oil. With crude oil, of course, a lot of you would have heard over the last few days, Saudi Aramco essentially is looking to go public via an IPO there in Saudi Arabia. And essentially what you did see essentially is, so used to what essentially there in a double barrel. But we have seen, since the markets hit that floor of 54 after that run there, we see a lot of consolidation. We see a lot of consolidation from resistance to floor to support, from support, floor, back to resistance. Now we've seen a breakout. Essentially where the breakout has taken place currently, as you can see, this is a Fibonacci retracement indicator. Now with the Fibonacci retracement, most people use 38.2 as the level of, let's say, how would I explain this? So generally you have levels or tiers of popularity. 38.2 essentially would be in first place in that popularity race when it comes to how the markets could move. Now, you saw previously what took place at 38.2, a lot of buying. You see a lot of buying, a lot of buying. So you do see why people may perceive at that level to hold waiting, because you do see a lot of action taking place at that particular zone. The question is, could history repeat itself, and could we see another run similar to the likes in which we saw before? That's one of the questions. Of course, if you are looking at the RSI, you can see the volumes have now essentially broken out of what seemed to be a resistance of around 56 when it comes to the RSI level. So could we see the opportunity for this to continue upwards, or may it be a false breakout similar to what we saw in that instance there, or in that instance and in that instance, and seeing the markets essentially come back down? So it's an interesting one again. Keeping it quite ambiguous again with these lessons, webinars, however we want to try and define them. We don't want to go into too much depth as far as giving advice, but this does look like one where you do see a lot of fundamentals. Of course, OPEC also cutting demand forecast for the next year as well. So you do see a lot of fundamentals which could potentially increase the price as it pertains to this. So it's one to definitely keep an eye out on. Of course, if you are interested in energies, you are always going to have a lot of people interested in trading oil. So again, from a technical perspective, I hope including this in this week's trade view does give you a better overall view on how this could be moving. Now, last but not least, we are going to be looking at euro dollar. And similar to gold in a sense, you have seen from resistance to support, the markets did hit that resistance, but instead of continuing upwards, history essentially repeating itself with that sell-off, similar to what we saw taking place at similar levels before. Now, similar question, what do we believe could happen? The markets have hit that floor. Will you see history now repeat itself with a lot of buyers looking and priming themselves to essentially go ahead and bring this back up? Or are you going to see the momentum of the shorters continue? You can see that 10-day moving average essentially looking downwards at that 25, at that 50, at those 50 day moving averages, and essentially saying, do we have enough proximity between us to potentially go ahead and cross over? Now, what could be interesting here is, what would sellers do, or would sellers be hoping to see this floor broken before piling in and doing similar to what they did in that instance there? You do see where the volumes currently sit around 47. If you're looking at this, relatively speaking, it does go around 29. That seems to be the level of overselling. And it does look like it's around down there 18 points from that level. So could there be more opportunities downwards in conjunction with the potential for the momentum to continue and cross over? It's an interesting question. That's a daily time frame. Of course, a 4-hour time frame could give you a different perspective. You can see that crossover in which you were looking for in a daily has already happened in a 4-hour time frame. But again, in the 4-hour time frame, you see the current candlestick started off somewhat bullish, potentially feeding off of the previous bulls at that level also. So a lot of questions, a lot of potential answers over the next few days this week. And ironically, we may have the opportunity to look at one more. Of course, we do know this is somewhat of a heavy week for GBP. So we will be absolutely remiss not to look at GBP USD, looking at cable. Now, with cable, of course, you've seen a lot of ups and downs, but essentially what you are seeing now is consolidation. We had that run a few weeks ago where, of course, Boris Johnson came into agreement with the EU, where they were going to agree on a Brexit deal. But of course, that Brexit deal wasn't passed through Parliament. And since then, we've seen a lot of uncertainty, of course, coinciding with the UK going to election, going to the polls December 12th. Now, it's a case of course, we know with anything, you can't continue at 100 miles an hour, and that run could essentially be the metaphor for 100 miles an hour. Now you see it is essentially at the gas station trying to refill the tank before it is able to move back to essentially where it came from, or setting new levels. Now, if you zoom out and look at this from a relative perspective, you can see, relatively speaking, it is still weak to where it has been previously. It is still weak to where it has been previously, and we haven't seen the markets reach these highs essentially since the early part of the year. So a question could be, towards the latter part of the year, could we end essentially where we started with cable, heading towards those 133 levels? Or at the moment, looking at the RSIs, it's just too overbought. There's too much buying volume in there to see this continuing to run, because again, looking at the volume of buys, we haven't seen this type of buying damn near since December of 2017. So it's been a while, and you can even go further back. You can see, historically speaking, going damn near till 24. We haven't seen this type of buying before. So it's a case of saying, is this overbought? Is this overbought? And are we just waiting for this consolidation to come to end before seeing the sellers take place? Or again, could this attempt to reach those yearly highs of around 133 before choosing its next direction? So a lot of interesting questions, a lot of potential in the markets, and from our perspective, of course, what we hope to be able to do, and what I hope to be able to do with these sessions on a weekly basis, is essentially simplify some of the storylines and see if those improve your confidence in going out and potentially finding some opportunity. So for now, and as always, I am your host, Eliman Dambell, and thank you for viewing the weekly trade view, and we will see you next.